Good morning. Welcome to Trading with Larry. I'm Eric Shamilov, joined by Clint Brewer. Larry can't make it this morning. Hope everyone is doing well. For sure, the market is doing much better. So the market is doing well on a day where we had overnight news from Taiwan Semiconductor, and this is earnings season. So this is a hallmark of earnings season. I think one of you guys called it a roller coaster market. Yeah, earnings season tends to be extremely choppy. And so we had our first tech earnings report. Not domestically, internationally, Taiwan Semi came out, and I think that um, fueled a little bit of an overnight rally. It's going to be interesting to see what the market is going to do today, given how the market is going to be uh, nice and green at the open. Nasdaq is already up almost 1%, far outpacing everything else. And this is what we're going to have in earnings season. This is why I keep saying I think where real vol is going to come in is going to be probably end of January, beginning of February. That's kind of like a ballpark estimate of when I think we're going to see interesting opportunities to do stuff a little bit more aggressively with the index. But it just feels like a touch and feel market, kind of mixed market breadth, lots of stuff going up, lots of stuff going down. Um, and today just feels like another one of those where you want to just kind of watch. Yesterday was crazy. It felt like the bottom was going to come off the market, and it found some support right at its 21-day moving average on the ES. So, very technically sound market level to level. I expect a lot of that today as well. I think today's going to be a little bit more. I don't want to say the word predictable, but I think there's stuff to do right at the open. I think with the SPX, but that's where we're at. Clint, I'm going to give it. What do you think of this first tech report? Is
Yeah.
this
So
something to hang your hat on?
TSMC saves the day, right? Like, yeah. So here's what. Yeah, I got a lot to talk about with this reaction to TSMC because if you look yesterday was very important. You had the S&P 500 was down a little over 0.5%. You had the Nasdaq down a full percent. If you looked at the indices, like it felt like a crappy day. But when you look under the hood, there were more stocks going up across the market than going down by a very wide margin. So we were talking yesterday about how strong breadth has been to start the year and how the average stock has been leading the way. And, yesterday's action encapsulated that perfectly. And this AI trade has just really been, I don't say it's struggling because it's not like, these stocks are down in bear markets, but I mean, they're a lot of them are nowhere near their highs. A lot of them made a high back in the October range. And so that's why today's very important. Does TSMC spark a turnaround for these names? I mean, TSM, Taiwan Semiconductor. I mean, the one of the big points in their earnings release. I mean, I think they raised their capex by like 25%. I mean, it was some huge number that they boosted capex by, and so that's a sign that the AI spending train is alive and well and rushing full steam ahead. And you got all these names up pre-market. TSM's up 5.5 pre-market. I looked at Nvidia. Nvidia's up like 1.4% pre-market. I don't think it's quite getting back what it lost yesterday. So watch the open on these names and watch how these names trade throughout the day, because these stocks have now turned into laggards for the better part of the last 3 or 4 months now. If they can't get a boost from that TSM news and close strong on the day, then I think that points to a continuation of the trend that we've seen to start the year, where it's this rotation out of the AI names and into, I call it the average stock, which isn't necessarily a bad thing, because I mean you've got a lot of we're talking about like UPS yesterday, like transports are breaking out, the small caps are breaking out. It's a good thing to see these cyclical sectors, these cyclical stocks um, rallying, not just names geared toward all this AI capex spending.
Yeah, I 100% agree. I think if Nasdaq can hold it together today, I think that would definitely qualify as kind of a fake out here. This is earnings season. I like to just kind of watch, um, and it just feels like the day is almost over before it started. It's like I don't see a big range. Volatility kind of came off. Trump backed off of uh, putting a strike on Iran, so the geopolitical tension had a downtick. You can see that in vol. Silver had a wild night. It was, I mean, a wild night. It dropped a ton, like 7-8%, peak to trough. Back a little bit, but you know, um, some of that geopolitical tension, I think, is coming off a little bit today. Not that it's gone. And
These
then you
this
had that
whole
Supreme
this
Court.
whole like I this whole Iran thing, by the way, is just absolutely mind boggling to me. Like, why are we speculating that we're going to go in and bomb Iran or whatever, and cause more instability? If Trump's desire is truly for lower oil prices, like what are you going to achieve by going? I mean, we're not going to have boots on the ground. Like, you're going to cause more instability. Who, if you kick out the regime that's there, who's going to come in to replace them? I mean, it's just, it would be so chaotic. I don't know. There was so much speculation building behind an Iran strike that I don't know how much of that was a catalyst for pushing oil prices higher. I think at the end of the day, like low, sound funny to say, but I think low oil prices led to high oil prices. Oil prices are just getting down to a level where that the cost of investing in new production doesn't make sense for a lot of U.S. producers. It certainly doesn't help OPEC members balance their state finances, and so I think that that could have been a driver. But just, I don't know, the whole Iran thing just kind of was blowing my mind, that there's so much speculation over an attack when clearly the desires for lower oil prices.
I think everybody's fixated more on geopolitical events because now you could bet on them. Poly market, Intercontinental Exchange, by the way, um, a stock that I like. I'm in that. It has been really rallying a lot. I think a lot to do with the growth aspects of being in the betting market. So I think betting markets are, people have access to that now. And the U.S. market, it's so narrative driven. Any kind of news headline like today, you see, okay, one company came out with an earnings report. The whole market feels like it's completely different than it was yesterday. And you're going to have a lot of narrative changes over the coming weeks because of earnings. Financials were getting hit, and that was the fixation. Now you have Taiwan Semi. Today it's going to be a fixation on tech. So with the market already up, pretty good to start the day. So I just feel like this is going to be looks like a day where you want to kind of plan out. Like yesterday, I wasn't planning out an iron condor. I think today, I think there may be a nice, well defined range, but we're such a narrative driven market. Like every day, like something. Like everybody was anticipating the Supreme Court. That they canceled that again. I don't know what your thoughts are on two consecutive cancellations on this tariff decision, but
I
what do you
I
make of
will I will say this as somebody who is definitely not an expert on matters within the Supreme Court. So let me throw that out there. But the fact that one, I don't know when the next decision is. I tried to find that, and I don't think they've announced a potential date on the next ruling. But if no if if they keep kicking the can down the road like this, if no decision means like they're still behind the scenes deliberating this potentially. I don't know if that's what this means, but if that's the case, then in my mind, that starts to increase the odds that they're going to uphold the tariffs, or you know find some way for the tariffs to be upheld. Maybe it's maybe there's some stipulations around it, but or it's a call it a soft rejection. I don't know. But just the fact that they keep delaying this thing, like, there's so much anticipation that they're going to come out and strike tariffs down, but they keep delaying the decision. Like, I don't know if anyone watching is an expert on these matters, if you can chime in the chat and let us know. But that's where my mind goes immediately, at least.
Is there a date that like a date that they're planning to come out with this?
I could not find another date. They have not announced a subsequent date yet.
So it could be like 6 months from now. Nobody knows.
Exactly.
It
Nobody
was
knows.
funny yesterday. They released the cancellation news like a little bit after 10, and the market fell anyway. I thought
That's what we said before. You could tell me what they're going to do, and I don't want to. I don't want to bet on it. I don't want to bet on it at
exactly.
all.
Yeah, that
That's
that
it.
definitely turned out to be 100% true.
No,
What do you
one,
think of crude
one,
here? Now,
one,
crude's kind of fallen off. You mentioned crude before. Um, has this entire move just been geopolitical?
yeah,
And
part of it. I think part of it's been what I talked about, like oil's getting down to whatever it was at $55, $57 a barrel. I mean, that's a level that I think can really cause some concern over the outlook for new production. So that was likely a factor. But then yeah, you definitely have the geopolitical factors on top of it, which didn't maybe work exactly as some people thought. Like the speculation was that this whole strike on Venezuela, we were just the U.S. was going to go in and all of a sudden unleash the tap, so to speak, and flood Venezuelan oil in the market, and you would see more downward pressure on oil prices, and it worked the other way around. Actually, we've I don't know, have the numbers right in front of me, but I mean, Larry, we have been very active in trading USO, which is the ETF linked to oil prices, and we've been, Larry's been anticipating some of the geopolitical instability as a bullish catalyst, and we closed out another trade. The second half we closed out yesterday morning. Before, it was great timing. It was before the headlines came out in the afternoon that sent oil prices lower, and we closed out some USO calls for, I think it was a blended like 77% gain. But I think we've done like 5 USO trades since October, November, and four of them have been for a gain. So we've definitely, like, commodities have been the place to be. I mean, there's been not a lot of volatility
really,
in
oil's been well. I haven't traded oil in months in a real way, like a real position.
Yeah,
It's just been
we were so active in equity names and stock names earlier in 2025. Around everything around the trade war, and then as that died down, I mean, you had the move in gold and silver, obviously, but yeah, there's just been a lot more volatility to trade in just commodities in general, but especially in the fourth quarter and into this year. I mean, we've been hammering the oil trade pretty hard.
Are you guys short silver? That thing is
We
down a
we
little bit.
just all right. So we just got short silver yesterday. So we'll see.
Oh, nice. Good
We'll,
timing. Good timing. Good timing.
we'll see what that looks
For
like at
one
the
day,
open.
let's see what happens. Is just maybe a 1 day uh, decline. Usually, what silver's been doing lately has been you'll have like one red day and then it rips again. I don't know. I think I've said I would be interested in buying it again at like 66. Once it broke 50, I didn't know what was going on until the curve got backwardated. I realized there's a supply issue. I know Larry doesn't agree that there's a supply issue or anything, that it's all retail driven, but I'm kind of, staying away from it for the most part. I'm in gold, but silver. I think trading silver without, with options, I think it's okay. But like, how are you guys handling it? You guys bought puts, but what's the implied volatility on those puts? I mean, it must be
Yeah,
really
the IV.
crazy.
Yeah, you're. This is definitely not something you want to stay in for very long. But I mean, yeah, we're so I agree. I mean, if you're trading silver, you want to do it via options, and so we did it with puts on SLV. Um,
Were they straight puts, just straight up puts?
yeah, no spread trades. Yeah, just the outright long March expiration put. And yeah, I mean, we would look to exit this trade fairly quickly. I think no matter what direction SLV takes right here, I mean, you're going to see silver volatility stay elevated. I don't think IVs definitely is going to be up, and which is sometimes that can present an issue when you're initiating a new long position. But I don't think I don't think you're facing any sort of IV collapse anytime soon. So I don't anticipate implied volatility working against us. And just for those watching, just throwing these terms around. I mean, implied volatility can be a pretty significant driver of the option premium. I mean, we've had trades before in opportunistic trader and S&P trader where we've had like absolutely zero move in the market, in terms of the direction we wanted, and a move in an implied volatility alone was enough to drive our position to a profit. So IV, can be a very significant thing, especially when if you buy at a low IV level, and especially this works out a lot on the downside. If you can buy in at a low IV level and things are selling off, if you have a put position, IV can be a big contributor to your return. But it also that can work the other way to where if you're buying something that's had a period of high volatility and IV implied volatility is really high, you could be paying a much higher price for those options than you otherwise would, and so you just need to understand kind of the underlying drivers of market action and what IV could do over your intended holding period for that option, at least on again, this is just a kind of a plain vanilla going long an option, not necessarily doing a spread. When you can probably speak to that, Eric. If you're doing a spread, it's kind of can be a little bit different.
When IVs like high like this, I find it like if you buy straight up puts, even if it falls, you might have a problem making money on the put. I remember one time we put out uh, a put option on Mara Holdings, okay, and the stock jumped like it must have been like 80% or something, and our puts were up money. That was the most incredible thing I've ever seen. Right. So, and it goes both ways. Like you're buying puts and the thing could go down, but, um, I just find it when IV's like this high, I rather sell credit spreads against it because you're going to get really nice premium. Right. So I don't know. I don't know what you think about that in terms of what you do, like what is the right, but you guys don't put on credit spreads on individual tickers, right? Only SPX.
Right, only on SPX and S&P Trader. Yep.
Got it. Yeah. So where's the volatility today? Yeah, definitely in silver and gold. Market is now up. ES is above 7,000, and somebody on the chat is mentioning VWAP. I think that's an important indicator, especially in markets like this where you expect chop, which I'm expecting, and it tends to get level to level. Those VWAP levels are very important, and I'm seeing it right now on a pretty important VWAP over the last few days, right at that point of control on the volume, right at 7,000. So That's where the ES is going to be an interesting
Could
open.
you
You
could you
know,
talk could you talk a little bit more about that? Because I'm going to assume a lot of people watching don't understand what VWAP is and how you might use that to look at levels.
yeah, VWAP is your weighted, your volume weighted average. So um, it's basically where the volume and the price are meeting up, where most of the volume was traded. Um, I use a volume profile more so than a VWAP, but typically that point of control on the volume profile is pretty close to where a VWAP is going to be. Um, and so, like if I'm getting long and it's trading below the VWAP or the point of control, that's like my first target. Like that's how I measure my risk reward. And prices tend to gravitate towards these points of control, uh, driven by volume pretty frequently on an intraday basis. They serve as a great pivot, a great target. You can't really trade it by itself, without some sort of bias behind it. Like you need to kind of know, okay, well, what do I do with it? So I use it pretty heavily as a target, more than just like a directional thing. Um, and so, yeah, I mean, today you have two pretty distinct points of control based on volume. One here, right at 7,000, and then you have one about 40 handles below at 69.60. Just looking at it, given how volatility has come off a little bit overnight, geopolitical tensions have come off a little bit overnight. I think that 69.60 on the ES is a good kind of floor for today. Maybe, a few handles above that. So that would be somewhere I would be looking to sell put spreads. Whether you get premium down there, is a different story. I think SPX is going to open somewhere around 69.50, 69.60. So I'd be looking already for like a 69.30 put spread. And I'd be looking also because now we're so uh, far off that technical level that 30 handles below. We're at a new technical support level here. The market's already up, so at the same time, I'd be looking for uh, an opportunity to sell call spreads, maybe 30 points up as well. So I'm looking at that, as kind of a 30-point range, maybe 25-point range, up and down, and that's just purely just looking at the volume profile, which
Yeah.
is very similar.
You had the straddle today by chance?
I haven't checked it, but I would assume it's somewhere around maybe 25.
Yeah, I was gonna say 25 to 30 would be my guess.
Yeah, 26.
Okay.
26. I think the
Yeah.
day is pretty much over already. I just don't see. I don't see the market completely giving all this back. I don't see the market melting up from here on a Taiwan semi report. Feels like an iron condor kind of day.
Yes.
All right.
I was flipping through. Yeah, iron it definitely does feel like an iron condor kind of day. I'll give you that. We'll probably do the same thing. We'll watch the open, and maybe if we jump out of the gate, we'll look at what the call spread premiums are like for the day, and maybe look to potentially do something there. We'll also watch kind of the first couple minutes of trading and see see how the market's holding these gains before making a decision to do anything for those in our an S&P trader. One other earnings release that caught my eye. All the attention's on TSMC right now, but Goldman Sachs came out with their earnings report, and I haven't dove into it, but just the headline is that they posted record trading revenues in the fourth quarter. And I'm just like, how in the world are these guys like? Last time they had record trading revenues, it was during the trade war. Like it was the quarter. It was like one Q or two Q last year. Like right, and that's what I mean. These guys thrive on volatility. I mean, they just when bid ask spreads get blown out. I mean, like these trading units. I mean, they absolutely crush it. And I'm looking at their results, and it's like they posted a record equity trading revenue in the fourth quarter, and I'm just like, how are they doing this? There was no volatility in in the fourth quarter, and I don't know, like I just that's one that caught my eye. One reason that caught my eye is because Larry's actually what's that?
Is their revenue all just stocks, or are they?
It said in their equities trading unit specifically. I don't know what that looked like on fixed income and whatnot, but just that their equities trading revenue. And I'll bring it up because one, Larry's actually hosting an event tonight. It's at 8 p.m. and there should be a link in the description if you're interested in checking that out. And if you sign up, we did a little bit of research around. It went into Goldman's results and some of the things that are helping them drive that. Some of the things that they're using to their advantage that we're looking at as well. And so that's a lot of it comes back to AI. Actually, if you look, there's the Office of the Comptroller of the Currency. They compile a report every quarter that looks at all banking trading revenue. And if you look, it spikes higher the quarter that Chat GBT was released. So is that coincident or not? I don't know. But Larry again, he's got this event tonight. He calls it the Get Rich Slow event. Again, the link should be in the description, and if you sign up for it, there's also a free report we've got where we talk about a little bit of what's going on with these banks and their trading revenues. And that caught my eye, that Goldman result this morning, because we literally were just writing up some research around that.
Well, all I'll say, that's a good pickup, right? No volatility. How are they making all this money trading
Yeah,
equities? All I'll say is we had a lot of rotation that fourth quarter, a lot. All right, maybe the constant in and out, long short. Get out of this one, get into that one, pays the bills for these companies. But financials have gotten hit this week, haven't they? Like really hit. And you look at that XLF ETF, and went right down to these widely tracked moving averages. Everybody's probably looking at that as support. You think this is a buy here, or is this
I
thing?
I'll be honest. I've not been following the financials trade that closely. I know, there was a big dip after JP Morgan's earnings. I mean, I know JP Morgan finished down 4%. I did glance through their earnings release really quick, and I didn't see the underlying reason why they should be down 4%. I mean, the quarter looked good. Jamie Dimon was making some comments about how, things are holding up better than what they expected. I know there was some news over the weekend around capping credit card rates. I don't know how much there's fear of additional regulation that's creeping into the financial sector, but it is that, if you're just looking at XLF, that is an interesting point, because I don't know if you can pull a chart up, but I mean, I'm looking at it, and XLF is right at the $54 level, which was a breakout from a kind of call it a congestion area back in September through December, and it's back testing that level as support, which is also the 50-day moving average. So I mean, if you're looking to put on a reversal trade, off this quick little pullback, that could be an interesting area.
Yeah, I mean, it's 2 3 days after earnings. JP Morgan, well, 2 days, I guess. Maybe give it another day, but yeah, I'm kind of looking at it. Still have it on my screen. It was interesting actually watching JP Morgan yesterday. I said I'm going to have that up on my screen, and I did. And I was just watching it as the market was falling, and J.P. Morgan was right there with it, dropping, and it started to kind of like you know find some support. Then it kind of went up a dollar, then another one, and then the market followed suit. So I know today's tech day. Everybody's going to be fixated on tech, but I'd watch that. Like I'd watch, I'd continue watching financials to see if they could rally. And if, if they can't rally, that's kind of like if they can't rally from these levels. I think it just underscores that the market's got some issues here. So I'm not fully convinced about this gap up in the market today. So that's one to watch for a potential reversal if we're going to get one. I'm still in just kind of watching it. What do you think about we speak about financials, and I mentioned Intercontinental Exchange. I don't know if you follow this stock or not, but there's some it's been ripping pretty good, and I'm just wondering whether this is all poly market related, whether the market is now looking at this as a value stock with potentially some growth to it. I really like its involvement with the betting markets, and I was reading yesterday they generated $18 million on just one contract betting on an Iran strike. You know, they're getting more and more involved with that. They have an investment in Polymarket. They also have this more electronic mortgage platform called Encompass, which a lot of people don't know about. And if housing picks up, if real estate is coming out of a bear market, I think ICE could be a little bit more than just a futures exchange.
I
It
mean,
seems like
yeah, I don't know. I don't know a ton about them or the different, their units involved in the mortgage side of things or what they're doing with Polymarket. But when I look at it, I mean, yeah, the charts, the rally off that 145 level since November's eye catching. But when I think about this name and the underlying drivers, like all I see on social media and Bloomberg is about record retail trading volumes or record option volumes. Like that just has to be a tailwind for whatever their their underlying core business. Like forget about these other things that they're getting into. Like if you keep hearing about all these record trading volumes, like that has to be a tailwind for them in some way, shape, or form.
yeah, we have a comment on the chat. Mr. Weitzer there, I guess, needs to learn options for dummies. He wants to get into it, and I think that's an example. A lot of people are hearing about options. They want to get into options. I would suggest you watch that webinar there today. Check it out. I think if you're trying to learn options, Larry's a pretty good place to start, right? I mean, I don't know many people that know options better than him.
Yeah,
So
I think
I would,
if you're looking at Larry's products, I mean, the one ticker trader is definitely a great place to start, just because there's a it's not as a high volume of trading as what we do in opportunistic trader. So if you're looking to ease into it, one ticker trader is a good place to start. And if you want more trades, then yeah, definitely go look at opportunistic trader. But what we do in one ticker trader is every month we'll lay out trading themes that we're watching. So we made some updates this most recent month to where we're going back to incorporating TLT because we expect some bond market volatility, but we're looking at the Qs, we're looking at IBIT for Bitcoin. We're obviously looking at USO. We've been very active there, and there's a couple other names. GLD for gold, one of them. But we'll go through So we'll take these themes and we'll do a write up on the themes and the charts and the levels that we're watching and kind of the directionally what we're looking to see with each of those themes, and then we'll also do a recap of what's happening in the economy. So Larry, definitely talk. You'll hear him talk about macro a lot and kind of what the macro backdrop is to drive each one of these markets. That's what we'll try to connect the dots between what's happening in macro and how it's going to flow through to each of these trading themes. And then from there, we're issuing trade alerts for again, this is it's pretty simple. I mean, it's plain vanilla, long a call option or long a put option. As Larry likes to say, he loves options because they're defined risk. You were usually looking at a contract somewhere in the $3 to $4 range, which means one contract you're putting out around $300 to $400 to an options premium to get into that. And then from there, if you're looking for more sophisticated strategies, if you're looking at instead of buying options, you want to sell options to collect premium. That's what S&P Trader is for. And there's some weeks where we're active every single day putting on spread trades in that product. There's some days where we are periods where we slow our activity is because the reward doesn't justify the risk, so to speak. And so that it comes back to the opportunistic that's in the name of the services, so to speak. But yeah, he's if you're looking if you want to learn and you want to get some exposure there, he's doing everything from long strategies to selling for premium. So it's a great place to start.
Yeah, I would say, for people just starting out, I think the most important thing is understanding the actual risk of what is the risk of an option. So it's called premium for a reason. It's like insurance premium, right? Insurance is called premium, options are called premium, and the reason is sometimes you need it, right? But most of the times you don't. So when you're just going out buying a put or going out buying a call, which is like elementary level one, what it's pretty difficult to consistently make money that way. I think just buying premium. I think a more consistent way of making money in options is doing both opportunistically, as you said, buying premium when needed, but kind of leaning on selling premium more. That's how institutions really make money in options. They're constantly selling options to the crowd. Um, and they're like an insurance company, right? Insurance companies make money selling premium. It's very similar. So I think somebody starting out, um, I think most people think, how do I buy an option? What you really need to think about is how do I sell options, and start from there, and then figure out ways how to buy options opportunistically. You have to be right in multiple ways when you're buying premium. Whereas when you're selling premium through credit spreads, uh, you don't have to be directionally right to make money. Like the stock could actually go against you, and if you're out of the money far enough, you'll make money. Or if it decays quickly, um, you'll make money. So I think learning how to sell premium and understanding like what drives an option. There's a few things that drive. It's not just like pure price movement. That's just one aspect of it. There's time decay. There's uh, volatility. There's all sorts of these things. So the goal would be to combine them to have you know uh, opportunities where you're buying premium and at the same time you're selling premium. And by doing that, combining buying premium, selling premium, you're really normalizing out a lot of the negative parts of options like time decay. Because you're selling it now, you're getting paid for that time decay. And at the same time, you're buying it opportunistically where you're paying for the time decay. So learning how to do both, I think, is important. And I've just found like there's certain market environments that are not great for option buying. They're going to be great for option selling. Those are going to be like range bound markets where the market isn't doing much, like right, you know. And then there are certain markets where you want to be aggressive. So when you're buying premium, you think of that. If you're buying premium, you're putting on an aggressive position. And when you're selling premium, you're less aggressive and you're kind of playing range. So, what I've noticed working with Larry and just trading options myself is I've just seen like certain market environments are conducive for specific types of option strategies.
Yeah, I would agree with that 100%. And that's yeah, the best strat. You want to get in and learn. You probably want to start with one thing, but then overall, it's a great strategy to combine buying premium with selling premium. And I have a book on my bookshelf over here, and I can't see it. I can't remember the name of the book, but there's a lot of books out there you can pick up that'll teach you about option Greeks. So Eric, you're talking about time decay and how price movements can impact the price of an option. How volatility impacts the price of an option, how the rate of change of the price of the stock price can impact the price of an option. Those are all called, there's option Greeks that describe how all these variables will impact an option's price. And there's definitely a lot of material out there that you can get your hands on to learn about some of that stuff as well.
Yeah, I think you guys are in the right spot if you want to learn options. So it's 9/11. Market's opening up pretty soon. Um, Futures are ticking up even higher, especially the Nasdaq. I'm looking at open interest on the SPX, and I'm seeing 7,000, 7,005, 7,010 SPX. Pretty good open interest. There's some premium out there with the market set to open. It looks like 69.60. That's where SPX is probably going to open up. So there's a lot of premium above the 7,000 strike today. So I don't know what the market is thinking is going to happen, but somebody somewhere is thinking that we're going to rally really hard today. I'm probably going to sell those. That would be quite a move. But you know what? Um, you never know. You never know. Maybe there's some unforeseen, voracious appetite out there to get this market up to like 100-point day. But right now, there's a lot of premium above 7,000. I find that pretty interesting. 69. At the same time, there's premium 30, 40 points out. I think there's plenty of premium out there to work with today, even though volatility is kind of has fallen off a little bit. So it's going to be an interesting day. I'm of the mind it's pretty much over, plus or minus 25. So I'm going to be. That's my base case for today. That's kind of what I'm going to be working with. Might be a great day to sell premium on both sides. And the great thing about SPX is, or any kind of defined risk credit credits, you know what your risk is going in, and it just becomes, you get in trouble on one side, you can start hedging out by putting offsetting trades, and you could work it, you could work it to where you could get paid on both sides multiple times within the day. But that's a little bit more advanced. I think people that are subscribed to Larry's SPX trader know that know that pretty well how he does that.
Yeah.
And that's it. I mean, everybody tune into the webinar tonight. What time is that coming on, Clint?
8 p.m. There should be a link in the description if you want to check it out.
Get rich slow. I like that. That's the correct mindset in trading, by the way. Get
Yes.
rich slow. If you're trading like every single morning, the first thought I think people should have is, am I trying to get rich quick or am I trying to get rich slow? And if
If
it's
you're
if
trying to get rich quick, call it a day and come back later. Like,
exactly. So I think we'll leave it there unless you want to add something before the open.
no, I think you nailed it. I mean, I keep an eye on the AI stocks after TSMC. You know, they're a lot of them are set for a strong open. And I think how they close relative to the opening gains is going to really set the tone for the S&P and the Nasdaq for the foreseeable future, just like they have been for the last couple of months now.
All right. Everybody have a great trading day. Clint, great talking to you. I'll see you again, next week?
Some other
Take
time.
care.